Hello and welcome to Wilson Center Now, a production of the Woodrow Wilson International Center for Scholars. I'm John Molesky. My guests today are Shihoko Goto, the Asia Program's Deputy Director for Geoeconomics and Senior Associate for Northeast Asia. Shihoko is also the program's Acting Director. Also joining us, Meg Lundsager. Meg is a Wilson Center Public Policy Fellow who previously served as the U.S. Executive Director and alternate Executive Director with the International Monetary Fund. And also joining us, Suman Bery. Suman is a Wilson Center Global Fellow, a non-resident fellow at the Brussels think tank Bruegel, as well as a Global Fellow of the MasterCard Center for Inclusive Growth in New Delhi. Suman also previously served at the World Bank, and due to some connection difficulties, Suman is joining us audio only today. I want to welcome all three of you to the program. Thanks for joining us.
Thank you.
Thanks.
So we're going to be talking about the recently concluded World Bank IMF meetings. And before we assume that everyone who's watching the program is familiar with what those annual meetings are about, Meg, I want to impose upon you, as someone who used to be part of that world, to tell us what the annual meetings are. What is a typical agenda?
The typical agenda at an annual meeting is a look back and a look forward in terms of what's in front of the institution. So you have ministers and governors, central bank governors from around the world gathering, a much smaller group this year. The delegations were restricted, but they have small meetings where they discuss exactly what their problems are, what they think all of us collectively, countries around the world, should be doing to turn things around, and then to focus specifically on what they think the IMF should be doing. This is a policy guidance meeting. It's called the International Monetary and Finance Committee. It's 24 members who represent the full, full membership of the IMF, and they give guidance to the managing director, the staff, and to, of course, their executive directors. So I, of course, listen very closely to my bosses, the Treasury Secretary and Federal Reserve Chair when I was the U.S. Executive Director, and that then put a focus on our work going forward. So we can talk a bit too about what the key issues are when we come back, if you want.
Excellent. Meg, thank you for that overview. And let's begin. I know that the three of you were together for a Wilson event previewing the meetings, and certainly a lot of the discussion heading in around the world is what would be completely predictable, pandemic recovery. But now that we're past the meetings, I'd like you to talk about any headlines that emerged, what you would say would qualify as headlines, anything surprising, anything of that nature. Let's begin with you, Shihoko.
Well, let's start with the expected results. That is to say, there was cautious optimism about the global economy. A couple of days before the meetings, the IMF actually released its latest projections for the global economy. And even though it was slightly lower than what it had projected earlier in the year, it's a pretty good picture for the world. And I think that certain areas of the world are going to be doing a lot better than others. I think the Asian economies are particularly robust. But that is not to say that there are not risks looming on the horizon. Here in the United States, there isn't a day we don't hear about the looming clouds of inflation. And how that may impact us. We also hear about supply chain disruptions, and I think a lot of us actually sees that on a day-to-day basis as well. Then, of course, we have the more global issues, which include how we are dealing with the pandemic. The industrialized countries have largely been vaccinated or are close to being vaccinated for the majority of the population. And there is a clear divide between those countries and the emerging markets and the less developed countries that have yet to receive their first COVID vaccine. So the COVID divide is becoming a very real factor. And so there are so many factors that these actors at the government level and also at the international organizational level really need to continue to coordinate.
Suman, your thoughts on any headlines or surprises emerging from the meetings?
I think because I was a staff at the World Bank and Meg has been on the board of, has represented the US on the executive board of the IMF, Let me focus a little bit more on the World Bank side of this and
Okay.
make two or 3 points. The first was that there was, in the weeks leading up to the meeting, quite what the English call a kerfuffle about a report that had been commissioned by the board of the World Bank about a series of events that led to an upgrading of the rating of China in a very influential document produced by the World Bank called Doing Business. Okay? Now, we can talk about the ramifications of that, but the World Bank has its own, as it were, committee of governors called the Development Committee. And the Development Committee communique actually, in rather strong words, talked about the need for transparency in and ethics in the research and knowledge activities of the World Bank. So I think that this is a theme that will resonate on the two sides of 19th Street. And so it was important to me that found its way into an official statement by the governors. The second is that while the fund has, and we can talk about this, gotten more and more into the area of climate change, the guidance being provided to the World Bank certainly gave it an important role in climate change finance. But for me, John, what was significant was that there was that it was counseled to balance between mitigation, which is the reduction in carbon emissions, and adaptation. Okay, now I think one can read a lot into that, but the fact that, as it were, the good and the great now believe that you need to focus on adaptation as much as mitigation, that was interesting and important for me. And now, the question of, as it were, this is maybe a dog that didn't bark. In the commentariat, there has been a lot of discussion about the fact that the World Bank, in particular, as the leading multilateral development bank, has been too conservative in how it uses its capital. So one had hoped that there would be some commentary on becoming more aggressive. But in fact, what we found was a language to the effect that, the next 5-year review of World Bank resources needs to be given attention to. I should also have mentioned that there was positive commentary on the replenishment of the World Bank's soft loan window, IDA. So these are the issues on the bank side, and I'm sure Meg will come back to the issue which is much more in the funds bailiwick, which was the reallocation of the special drawing rights.
Meg, your thoughts. And one question that Suman raises is this notion of, is this a time for bold action or is this a time for more prudent action? We've seen the same thing with individual national economies, where there's lots of talk about the end of stimulus. That was what carried many of us through the pandemic. What are your thoughts?
Yeah, no, I think that in the IMF, they are looking to those challenges that are really going to overwhelm us in the future. And this is based on the experience we've all just gone through in the pandemic and how clearly unprepared around the world we all were. So the IMF put a big focus on continuing to help countries recover from the pandemic, urging on the vaccinations, trying to do what it can, but of course that's not the IMF's direct role, but focusing on the kinds of policies that the large countries need to sustain the global recovery that Shihoko mentioned, seems to be underway, but also to focus on those countries that really are going to face some very difficult times, not just in the pandemic, which is ongoing, but looking ahead to climate, as Suman was just talking about. And one of the things the IMF is working hard on, which was reinforced and highlighted in the meetings, is a new facility that pretty much seems agreed will be set up and we'll hear about more details about it in the coming months, but that would be available to low-income countries, lower middle-income countries that face a lot of structural challenges going ahead. So this could be related to climate change, technological change, ongoing pandemic, and looking at the IMF providing financing at a little bit longer term than it normally does, realizing that a lot of these challenges are going to take more than just 2 to 3 years to reverse. So I think that's one of the big outcomes of the meeting. I would add to that, the IMF is clearly worried about looming debt distress in a number of low-income countries. The World Bank is too. Both heads of the organizations have focused a lot on this, as have many of the ministers, Secretary Yellen and others. So getting all the different types of creditors to participate in orderly debt workouts for the countries that really are headed towards a default is going to be a real challenge. And the G20 has agreed a framework, they call it the common framework, but it isn't working yet. So there's going to be a lot of push on the institutions' part to get countries to bring in all those actors within their countries that are lending to these low-income borrowers. So I think those are some of the key efforts of the IMF going forward. It won't be easy, but I really do applaud this effort to focus on what's coming at all of us and helping countries prepare better for that.
So Shihoko, I want to circle back to a word that you used in your opening comments, the word robust, that in some measures, the recoveries could be described as robust. And, my thought was compared to what? In other words, compared to where we thought we might be at this juncture in history, or compared to where we thought we might be in the negative compared to the anticipated and feared impacts of the pandemic.
Right. So in some countries, the United States is particularly notable in this. We're already seeing signs that the economy is actually stronger than it was before the pandemic struck. In other countries, however, in the least developed countries in particular, there is a greater concern about debt as well as dealing with this pandemic as well. So we're seeing this bifurcation, so to speak, between these two sides of the global economy that is going to be harder to meet. But what I do want to point out, though, is what can these international institutions do in answer to them? And so we've heard from both Meg and Suman about some of the issues that were directly addressed by both the World Bank and the IMF. But there's also this credibility issue that is emerging about the international financial institutions. And these institutions, they are not immune from the political agenda. And there is a lot of strategic competition that is emerging, not just on the security front, but also on the economic front. And so we see that these institutions are still dominated by the United States and the European nations, where there isn't as much ability for the Asian countries to vocalize themselves in the way that they see that they should be noted. And I think that's particularly the case in China. And that's what Suman was referring to when we talk about this report that came out, Doing Business, that the World Bank published, and how it's seen that the World Bank actually abided by some of the pressure put on by the Chinese government to put China in a favorable light. Some would say that these institutions are not immune from politics, and it's only to be expected that governments would lobby to have a better report about them. Others would argue that, well, that defies the existence of these organizations, and it seeks to a bigger issue of how neutral and how helpful they can be. So there's a lot of existential discussion about what is the future of the Bretton Woods institutions, what do countries actually need, and what, if any, are the alternatives.
Those are really fascinating points, Shihoko. And there is this notion of expectations. So much of our reaction and our analysis is based on what was expected in the first place. And the terminology that was coming in many of the statements was this great vaccine divide. And so I'm wondering if what all of your thoughts are on what the role of institutions like the World Bank and the IMF are in regards to the pandemic and seeing more equitable sharing of vaccines across the globe. Because, right, this remains the fly in the ointment. If countries are hobbled and economies are hobbled and the ripple effect on things like supply chains continue, all economies are going to struggle as a result of it. So your thoughts on where we should calibrate our expectations in regard to these institutions that we're discussing today when it comes to the great vaccine divide, as they choose to call it.
Well,
John, if I could just jump in here, I think this is part of a larger challenge facing the institutions on whether they have the tools to play a role with respect to what economists call global public goods, issues that transcend individual countries, whereas most of their instruments are at the country level. Okay, so I think that is an unresolved tension, because the reality is that the country financing role of these institutions, what they were set up for at the end of the Second World War, which is an awfully long time ago, remains very important for the least developed, the poorer countries, but really for the middle-income countries. In many ways, it has been supplanted by private capital flows, and indeed, one of the reasons that the debt service suspension initiative of the G20 didn't go as well as it might have is because private markets were willing to, as it were, return to lending. The point that that you are making about instruments for addressing climate change, instruments for addressing the spread of vaccines, you can do stuff at the country level, but the question we should be discussing is there a gap in the architecture to actually for these institutions to take on these issues? Now, these have typically been taken on by the UN specialized organizations. And we know that the US has had its criticisms, certainly under the Trump administration, of the governance structure of those institutions. I would really say that an issue to watch over the next 5 years is how the international community, maybe led by the G20, uses these institutions to achieve these larger goals. And I saw Meg quoted, it was in the Financial Times, it may have been in the Journal, to say that it's a pity that when these institutions are needed for these global challenges, that their own credibility and governance is coming under the kind of strain that it is between the US and China.
Thanks. Meg, you're going to contradict your own quote, or you stand
No,
behind that? You weren't misquoted, were you? No, I'm teasing.
No, I won't do that. It is discouraging that there's a lot of time being spent on dealing with this and reassuring everyone. And maybe I can add a little bit to some of that reassurance in terms of how the IMF works. I mean, the staff is highly professional, and they're working very hard trying to help countries improve their own situations, give them the best advice. The IMF does learn from its mistakes, for instance, changed its recommendations on what Europe should be doing in the crisis, and owned up to it publicly. We were wrong about our approach. So I give the IMF credit for learning from the results that it achieves in its programs, which of course aren't up to the IMF alone, they're up to the country too, in terms of how they implement, how they bring along their public and meet the goals of the program. But the one thing, coming back to a point Suman made about, assistance goes to countries. This summer, the IMF membership in August agreed to an allocation of special drawing rights, very technical sounding thing, but it's an asset that's then put in countries' foreign exchange reserves in the accounts at central banks, and countries can convert them to other currencies and use the money then, the hard cash, to spend on needed imports. And so after this allocation, in the whatever it is, I guess about 6-8 weeks since then, a number of the low-income countries have used those SDRs to convert them into currencies and use them. Hopefully we'll get more information later on dealing with the pandemic, being able to buy vaccines and buy the support, in the market and other, the spending they need domestically to be able to deliver the vaccines. So that's been an important contribution. And then it's the advanced economies that don't need these SDRs, that have plenty of foreign exchange reserves because they issue them, their central banks issue them. They can, they're going to be channeling those, lending them to the IMF, either for low-income countries or for this new trust I was talking about, resiliency and sustainability trust. So I do think the IMF is trying to deal with that, and it's the substance of it. And the head of research, did a very, strong defense of their work. And I would say, sitting through, Shihoko, you mentioned the World Economic Outlook, sitting through many World Economic Outlooks while I was there, we might all grumble a bit about what the IMF was. Well, wait a minute, the number you've got for the US is too low. We're going to do better, grumble, grumble. But the point about the World Economic Outlook is it puts together what's going on in the entire world and tries to make sense out of it so that policymakers around the world can get a sense of overall the interactions of all our economies, what the US is doing, Japan, China, Europe, is going to have this kind of impact globally, which will affect commodity prices, oil prices, and capital flows. So therefore, it's a valuable input for many countries. And I would say that research department at the IMF is, pretty independent, pretty capable, and the country teams that work diligently on monetary fiscal policy recommendations for member countries, I think really make an effort to put together the best information they can and have open, honest discussions with governments, which I saw many times when they were meeting with US officials. They did not hesitate to hold back.
Thanks. Shihoko, you used the term existential when looking at the future of these institutions. And Suman talks about, origins that date back to World War II. A lot of what all three of you talked about raises a question for me about, is the current structure up to the current task? Or do there need to be larger reforms of how we look at, as Meg put it, piecing this whole global picture together?
Well, if I can jump in, there are two issues. One is dealing with the looming problems ahead, right? And there are a number of them. We've discussed them. Are the IMF and World Bank capable of dealing with those mounting challenges? I would say yes. But the problem perhaps is representation or perceived representation. And we've already seen countries like China voting with their feet and creating their own institutions. Although they remain with the IMF and the World Bank, they have created institutions like the AIIB, Asian Infrastructure Investment Bank. They have come up with their own development assistance strategy in the form of the Belt and Road Initiative, the BRI. So it's not to say that these Bretton Woods institutions are going away anywhere or that, God forbid, that they're obsolete, but we are seeing a multi-layered approach to dealing with mounting challenges that really cross borders. Even if they are purely domestic, there is a tremendous spillover effect. So we actually need more options rather than less.
Thank you. So in terms of summary, I want to ask you sort of the forest and the trees question at the same time and give each of you a chance to respond. And, about the trees, are there anything that was said or occurred in these meetings that we haven't talked about that you think is important to mention? That would be the trees part. The forest part, that big picture part, I wonder, a lot of our discussion has covered that, but I wonder if you have any other overarching thoughts on what this means for globalization writ large. Because often when we think of these institutions, we're thinking about globalization. Certainly pre-pandemic, we were thinking about development. And now, that picture has been muddied by all kinds of implications of a global pandemic. So I'm sorry to give you such a difficult question for your final question each, but if you would, anything you want to squeeze in terms of the trees, but then your concluding thoughts on the forest. And let's go in reverse order of our initial introduction. So Suman, will begin with you.
I find that's the kind of guy I am. I find it easier to deal with the forest, John, than I do with the trees. And so since I come from India, in the 2000s, and even before that, I would say, when hyperglobalization got started in the mid-90s, let's say, there was this hope, expectation, belief in what economists call convergence, that, with the right policies, poor countries would almost by right grow faster than rich countries, and that therefore the gap would narrow. And so, the fund and the bank were institutions, as it were, that existed to promote that convergence. My sense is that both skittishness prompted by the rise of China and the pandemic have turned this vision into possibly a chimera. Lots of people no longer think that that's the natural order of the world. So that is what concerns me. I mean, the bank and the fund were created, in effect, to bring Japan and Europe onto a train being pulled by the United States. And now the question is, are they fit for the task of doing that when the prospect of convergence is waning? Let me just stop there.
Thank you. Terrific. Meg.
Yeah, I would agree with what Suman was just saying. And I think one example of forests and trees is the whole supply chain problem we're all facing. I mean, we've got this program starting here at Wilson, the Mosaic approach on putting a lot of this together. But what's astounding is how we're all saying, in many cases, oh, globalization is bad. We really have to do more here. Yet we are all of our countries dependent on international linkages. And we're seeing that every day being played out, whether it's, epidemics jumping from country to country and becoming pandemics, the supply chains in terms of shortages of goods, the shipping problems. I mean, we are also interdependent. And I would say, as much as these institutions have been challenged, and perhaps they haven't played the same financing role anymore because private markets do that, they play this incredibly valuable role in terms of helping countries develop policies that will better prepare them for these really uncertain times coming. So I think that's really the forest. We've got to look at what all these different kinds of problems we're facing, but how do we try and pull together and find the common threads that'll help us all get out of it and help us all move forward. Politically, it's very challenging given difficult relations between the US and China, but there's a lot of common interest between these two countries, whether it's health issues, whether it's climate change. There's really a lot that needs to be worked on. And frankly, I was always able to work with my Chinese counterparts at the IMF, and so were my counterparts at the World Bank. So I think it's good to use these institutions to try and reinforce those connections and keep them working.
Thank you, Meg. Shihoko, you get the final word.
Yeah, so I am concerned about shaken faith in interdependence. And so over the last almost 2 years during the pandemic, we've talked a great deal about disruptions and the need for greater resilience and self-reliance, right? And that in turn really means more protectionist measures, to be more inward looking. and that our faith in globalization had already been shaken before the pandemic, but it's only become even heightened as a result of COVID. My hope is that we do see that there is the need for greater international cooperation. And one of the things that really heartens me in the case of the World Bank is that we have seen a greater commitment to IDA, the International Development Agency, and we are seeing greater efforts to coordinate on vaccine development and distribution as well. At least the mindset is there. But the domestic politics of countries will make it increasingly difficult to garner the kind of international cooperation and a focus on a common objective. And the international financial institutions will have to be even more accountable and be more transparent and be willing to work much more with their donor countries than even before to make sure that they continue to have that trust of the voters and the policymakers.
Great. Thank you very much. Shihoko, Meg, Suman, lots of brain power assembled here, and you've helped make us all smarter on very complex issues. Thank you for your time today. Meg had mentioned the supply chain initiative of the Wilson Center. I'll do a little plug for our viewers. For those of you who are interested more about this, there are plenty of resources available on the website, particularly a couple of Now interviews I did with Duncan Wood, also one about the new report that Meg referenced. So we hope you enjoyed this edition of Wilson Center Now, and that you'll turn to us again to learn more about these important global issues. Until then, for all of us, I'm John Molesky. Thanks for joining us.